I'm Michael Ritz. I'm the Executive Vice President of Investments at Peachtree Group. I handle capital allocation, investment strategy, and execution across our core businesses. A no purchase is when we buy a loan from another lender that currently owns that loan. So as opposed to originating a new loan within our credit business, we're purchasing it from someone else who had previously originated it. The opportunity stems from any motivation of a current lender and why they would need to sell a loan. And there's a number of reasons as to why they would need to sell a loan. One is capital allocation, so banks being federally regulated and or having outsized risk to a product type of which it poses more risks than it otherwise should, or they're misallocated from a risk perspective, they'll move to sell a loan to reallocate their exposure to that product type. Outside of that, timing. So from a risk perspective, maturities are often a driver of note sales. If a maturity is upcoming, the borrower doesn't look like they're moving to refinance the loan or potentially has challenges in doing so, that lender will lose faith in their ability to and move to potentially sell it to a private market, which is where we play. From a macro perspective, with heightened interest rate environment, liquidity has been strained on the financial markets, and with that, lenders are looking to create liquidity as well. And so we feel that near-term no purchases are going to be a much larger opportunity than they have in the previous cycle, probably the biggest since 08 and 09. Peachtree's been purchasing debt from other lenders since 08 and 09. We have a servicing and asset management department internally and are an active lender. And when talking to potential sellers of loans in these larger banks, they gain comfort in our ability to asset manage the loan, service it, take care of borrowers. We've already got a system in place internally, and we've shown a deep track record of being able to buy these loans, asset manage them, potentially modify them, and see them through to a successful payoff. But when we purchase a loan, it's our first goal to meet with the borrower, understand the current status of the borrower, the asset, and then move toward a capital solution that bridges a gap between their current ability to execute on their business plan and what they ultimately need, and typically that's time. The other benefit too is just it gives us a unique opportunity to scale. And so from an investments perspective, when we're purchasing debt, we can purchase 24 loans in a month, but it's hard to go originate 24 loans in a month.